Imagine waking up tomorrow to news that every nation on Earth, rich, poor, powerful, tiny, is suddenly debt-free. No interest payments, no borrowing, no international obligations. It sounds impossible, right? That's because the world is built on a financial architecture so deeply embedded, so woven into the fabric of modern economies, that most people don't even realize it exists, let alone how it keeps entire nations locked into permanent dependence. And here's the real mystery. This system wasn't built overnight. It wasn't created by accident. It wasn't designed by the people you think. Today we're pulling back the curtain on the structure that quietly shapes global power one interest payment at a time. Before we dive in, make sure you watch this video until the very end, because the final section will challenge the way you've understood money and nations for your entire life. To understand why the world operates the way it does today, you need to go back to a time when money wasn't digits on a screen, but something tangible. Gold, silver, land, resources. Back then, nations rose and fell based on real value. But as global trade expanded, something strange happened. Real value became too slow, too rigid, too limiting. So governments, bankers, and international institutions quietly laid the foundation for a new system, one that didn't rely on what countries had, but on what they could promise. And that shift, the transition from value to promises, opened a door. A door to a world where power no longer belonged to those who controlled resources, but to those who controlled credit, liquidity, and the rules of money itself. This is where our story begins, how promises replaced value in the early 20th century. Global powers realized something. If money stayed tied to gold, wars, trade, and national ambitions would always be limited. Gold had physical boundaries. Ambition didn't. So central banks emerged not as vaults of wealth, but as creators of money backed by nothing more than trust. Then came the critical turning point, 1944, Bretton Woods. Nations gathered in a quiet hotel in New Hampshire to create a new financial world order. A system built not just to rebuild after the war, but to establish permanent rules for global economic dependence. The US dollar became the anchor. Other currencies tied themselves to it. And for the first time, global power wasn't decided on the battlefield, but on a balance sheet. What the world didn't know was this. Bretton Woods was on T. The end of dependence was only the foundation. Through the mid-1900s, nations realized they could now expand faster than their resources allowed. All they needed was access to dollars, loans, and credit. World Bank loans, IMF structural programs, international development funds. These weren't just financial tools, they were chains, wrapped in diplomatic language. Countries borrowed to build infrastructure. They borrowed to stabilize currencies. They borrowed to modernize. But loans come with conditions, interest rates, repayment schedules, political reforms, currency depreciation, and trade concessions. This is how dependence is created, not suddenly, but gradually. Like a spider spinning a web one thread at a time. And while the world celebrated economic development, nobody noticed that the architecture always benefited the lender more than the borrower. Fast forward to 1971. President Nixon announces that dollars will no longer be exchanged for gold. This moment, the death of the gold standard, should have shaken the world. Instead, it was marketed as a temporary measure, but it was permanent. From that day on, money wasn't backed by gold or silver or anything of physical value. It was backed by debt. Governments issued bonds, banks multiplied deposits through fractional lending, international institutions expanded credit creation. The world now entered the era of abstract money, value created from obligations, not assets. And once money comes from debt, the only way to keep an economy alive is to keep borrowing. Dependence became structural, built in and inescapable. By the late 20th century, countries found themselves trapped in the architecture. The rules were simple. Borrow to grow, borrow to stabilize, borrow to survive, pay interest forever. This is why no nation, not one, fully pays off its debt. If it tried, the system would collapse, because the financial architecture isn't designed for repayment, but for perpetual servicing. It isn't a flaw in the system. Debt is the system. Countries that attempt to break free face currency attacks, sanctions, trade isolation, or sudden economic crises. Meanwhile, institutions enforcing the rules remain unelected, unaccountable, and immune to national politics. Modern parallels, the pattern repeats. If this were only history, it would be concerning, but it's not history. It's happening right now. Global debt has surpassed $300 trillion. More than 90% of countries spend more on interest payments than on education or infrastructure. Developing nations owe over $1 trillion in dollar-denominated debt they can't print to repay. In major countries, yes, even economic giants now rely on continuous borrowing just to pay interest on previous borrowing. Even the strongest nations are trapped in the architecture. We're watching an old pattern repeat. Debt rises. Growth slows. Nations borrow more. Interests climb. Dependency deepens. Through all of this, the architects, the lenders, the institutions, the central banks grow more powerful, not less. What this means for you? Takeaway number 1. Countries don't control money, the institutions that create credit do. The power structure sits above governments, shaping policy from the shadows. Takeaway number 2. Debt isn't a tool, it's a mechanism of control. Nations dependent on loans cannot make independent decisions. Takeaway number 3. The architecture won't collapse on its own, it's designed to survive every crisis. Recessions, currency crashes, wars, the system strengthens through chaos. We're entering an age where money is becoming even more abstract. Digital currencies, programmable payments, trackable financial flows. If the old architecture kept nations dependent, the next version may keep individuals dependent as well. The question is no longer, why did this system exist? The real question is, what happens when the architecture evolves faster than people understand it? If you want to understand the hidden machinery behind global finance, and you believe people deserve to know how the system really works, make sure to like this video, share it, and subscribe. This channel is dedicated to exposing the structures that shape money, power, and the future of nations. Stay curious, stay skeptical, and never stop questioning the architecture behind the world you live in.